Good morning, traders. It's Barry Wilkie with StartupTrading.com. It is Monday, October 13th, about 6 minutes till 9 a.m. Eastern Time. So we're going to get into, I wasn't looking for volatility to really pick up until this Wednesday at the earliest, but we had we've been staying in basically between those toss expected high and low moves of the day within reason. And you can see uh, that right after we had that liquidation break, right, there was no breaks. We took a beeline, which if you just measure the distance between that high and that low, right, and just look down, we had that, consider that one block. We moved a whole other block down to this uh, fair value gap or single print, right? That's been on the books for a while. And then, that put us into negative gamma, which just put us in a negative feedback loop and margin calls, right? I don't know if any of you guys realize, but, uh, you know, there are margin calls when you have these 2, 3, 4, 5 sigma days, up or down, really. Um, and that really is what drives those negative or positive feedback loops. And you can see that, once we started that liquidation break, you stayed in what I consider the diver down, right, between the uh, between the -1 and the -2 standard deviation line, right? You can never really get anything going above the -1 standard deviation line on the VWAP. So that is a clue for that as well that you can put in your arsenal for later. With all that being said, uh, I'm almost tempted to wipe Friday's action completely off the board and ignore it. And we'll get into that when I get into positioning here in a minute. Let's look at some scheduled news for the week. And I'd like to start off the week knowing where the big catalyst may come in. It's going to be tomorrow at 12:20. Powell's going to be on an open mic, right? That's going to be your algo frenzy. Uh, Potentially for the week, and we'll have to see. And then keep in mind, but the VIX doesn't roll this week at all. It rolls the following Wednesday. So I was actually looking for not this Wednesday, but next Wednesday to for volatility to open up, right? So another week and a half basically. So as we look, there's nothing else really scheduled for today. And then we'll see. We've been told that we're going to start getting numbers out because we need numbers out, even though the government shut down. So we're going to get PPI on Thursday, potentially, right? We'll see. It does say tentative still because, it's all up in the air. But usually you get CPI in and around or before PPI, and CPI is more important than PPI. So, uh, that made me look at next week. And then next week, we are going to get, it says non farm payroll on October 23rd, right? That is the day after the VIX roll, right? So that should be a little bit more fun than normal because normally it's on a Friday. There's a lot of gamma hedging on Friday with the market makers. So that won't be in effect next Thursday. And then we are going to get CPI finally next Friday potentially, and then we're gonna come back in and Europe is gonna flip over to daylight savings time, uh, and then as we sorry, I'm just flipping around here one more time. All right, we'll get into more of that later. So, anyways, we've had this liquidation breakdown. Remember, 600, and we'll get into positioning, was supposed to be the call wall. We had, and I'll have to update this a little bit more, but I left these on so we could see them, right? If we look at just the bell to bell trading, right, on Friday, right, we traded all three of these, right? So think of untested points of control as reasons to revisit the auction, right? So we have no business or no necessity or driver to take the auction back up to these. It doesn't mean that we won't go back up to those, but they're off the books now. So if we turn back on the extended session and look at it, right? uh, After the bell, right, we had those margin calls and a little flush there at the end of the day. So we have an untested point of control at 65.39 half, and we came down and hit uh, 40 quarter, right? So this is still, you've got untested points of control that will be visited at some point in the future. We just don't know when. From 63.93 up to 65.40, basically. So we'll watch that. But for today, and until Powell gets on the mic tomorrow, I made the comment in there, and one of our participants in the room, was asking about. We had the underwater trades we'll get into in a minute, and that's usually the sign of capitulation. I don't like to call out capitulation on a 1 day move down. Usually it takes more than 1 day move down to get capitulation, but it was a pretty violent move. But you could have a couple day bottom because of that, all those margin calls and all those traders that were long and wiped out against their will, right? So they're gone, right? So they can't sell today, right? They've already been flushed. So that's another reason that those underwater trades, when it happens on all the indexes, especially when it's a large move, kind of get, a little bit of a bottom formation around them. So normally after we have a move down, like this, you would stay in the lower third to the lower half for 1 to 2 days before you make a determination of whether you're going to go continue down along your merry way in the direction of the large uh, ATR bar, impulse bar, or whatever. In profile theory, we call this an impulse bar. We'd stay down below that, and we'll just have to see what we get. So let's get into the rest of the technicals in the overnight session. And I wanted to put this on the board, right? I don't know when Jack will be hitting. We have held this long sequence that targets up to 25,041 against the short overnight sequence that was holding before, and now we've just cleared up into that 61.8 of that. So we'll see if either of these draws come into play, but this targets down to 24,008 or 682 is what you'll be looking at for that. So overnight action for the ES right around 75 points here. And then as we look at positioning, one thing that I like to look at is who could help me the most during the day. Uh, with a guidepost for positioning wise. For the SPX, I don't really see a lot of, anything on the books that's going to make me say this is, near to where we're trading that's going to make me want to participate in the auction one way or the other. For the SPY, a little bit differently. We're currently on the SPY. We closed at 653. We're currently trading 661 right now. So 662, and this is what makes me say maybe we should just forget about Friday, because we're right back up around where we were in the auction before. We were a little bit above uh, 670. And anytime you're above the call wall for an extended period of time and you're not seeing the positions move up, you're overextended, overbought, and that is in positioning theory, not auction theory. But so we'll see, what we get. So you can see that there's a lot of traders that thought that these puts would have, some juice in them today because of where we closed on Friday, and they're getting nothing and probably not liking it this morning. So we'll see if that could produce a short squeeze right to where we're at right now, but that would put us in positive gamma not negative gamma at this point in time. But looking at the Qs, you can see between 590 and 600 is around the big markers for the day. You got some, 575 down below. We got down to around 582 on Friday, is where we got down to. And then 600 should have been our resistance for quite a while now, and we've been trading over that. So I'm looking at 605, 606 above, but status quo would be between 590 and 600. Well, we're already above this, so there's potential for a little bit of a positive feedback loop up in here, on and off throughout the day. I don't think you get back into normal action unless you're between 590 and 600. So those are really, that's why this is the title of my video. This is really where the rubber meets the road. Can you stay above this 600 level today or not? But 605, 606 is up there above. And then you can see there's some 610 up there, which we had, traded near or at last week. And then so again, I'm tempted to pretty much wipe Friday off of the board, all of the action, and then we'll see. We got some structure. You can watch the structure to see, what's going on. But we are right at the expected high move of the day for toss based on Friday's close. But Friday's close was a little wonky, so I don't know how much weight you really want to put into that. But we are right there at the expected high end of the day. So if we spend a little bit of time above this and then we cross back under that level, uh, just look for, smaller trades, I would say. I don't know if we're going to get to unchanged, but we could definitely get down to like 24,558. We could, I don't know if we're going to, get down and take out those overnight lows at this point in time. Could just be a sit up here again, because remember, normal action would have us just holding somewhere in this range, and to be honest with you, this overnight range is pretty huge. We could just stay, maybe marginally above it a little bit, to right in it all day long today. So I'm not looking for a lot. I think you're going to get a lot more juice tomorrow afternoon when Powell's on the mic. So if you normally don't trade through lunch, you might want to think about trading through lunch tomorrow or watching some technicals. So maybe take your lunch a little bit early or a little bit late tomorrow. But 12:20 tomorrow is probably where your bigger juice comes in for this week as far as things trading technically. I hope this helps. We'll see what Jack's looking at in a little bit here, and trade safe, and I'll talk to you tomorrow. Remember, volatility is a little bit opened up, even though I expect it not to be anywhere near Friday's action. You have to assume that it could be, and just cut your size. You'll probably have to open up your stops, or just take be willing to take 3 or 4 very tight stops to get before you get one going in your direction potentially.